As a turnkey provider, when you go and you ask, can I see the inventory? What you're going to hear many times is that we don't have a list. And that's a very truthful statement because as a turnkey provider, inventory changes hands all the time.
Mhm.
And so it really doesn't make sense for us to keep a list that we would like on the website that we would update on a daily basis.
Yeah.
And what it also does is it's not something that helps us make the right decisions anyways,
Mhm.
because we need to have multiple conversations with clients. So JWB is not an outfit where you just go out and, put an offer in and buy a property.
Yeah.
So anyways, so you see that a lot. Well, over the years, my team and I came up with an opportunity to be able to address your burning question of seeing the inventory in a way that includes you as the client in the decision-making process. And that's what I'm going to share with you all today. We get to go down a journey as if you're a brand new client. You've spent multiple hours on the phone with JWB so we can understand your goals, your resources. You've been vetting us for a couple of hours and a couple of phone conversations now, and we're going to fast forward right to property selection today.
Let's fast forward. You see, it is time.
All right.
Why don't you start pulling up while I
This
introduce you like if you're in the Excel Olympics?
Oh, yeah, could you do that?
From Pittsburgh, Pennsylvania, standing at 6'4", 225 pounds, 3% body fat, all muscle,
This
the
is good.
greatest Excel
The
athlete,
Tayshaun Prince of the Excel Olympics.
sneaky long and unbelievably athletic. He's been called the Tony Romo of real estate investing. Greg Cohen.
That was really good.
Greg
That's really
Cohen,
good.
everybody.
I feel like you need the Matador or some type of name as well. You can work on that one.
The Matador.
All right, guys. So this is what portfolio selection and recommendation looks like within JWB here. So I'm going to walk you through, guys. Guess what? For all of you who are tuning in live on the Zoom, I'm so glad you're here. You guys are in for a treat because we're going to see lots of numbers, and I would love for this to be interactive. If you have questions about why did I choose this asset here? Or what would happen if we did this? Or how would you build my portfolio if I came in with this certain amount of money? Or what would you do? This is a great hour for us to dive into that. And for those of you who are on the podcast, it's a lot of numbers that we're not going to be able to read off the screen. So join the Zoom next time.
Yeah, if you're on the podcast, this is one of those where you're going to want to go to YouTube and like
There
look
you
at
go.
this episode on YouTube so you can watch, you can follow along.
There you go. There you go. So
Drew says that the Tony Romo comparison is dated. Full disclosure here, Tony Romo, when we started the show in early 2020, Tony Romo was like new in the broadcast booth and he was like really, really good. And he's also sneakily athletic and devilishly handsome. So that's why we use the Greg Cohen comparison. Can't compare you to Brady because he's not that good in the booth.
That's exactly right. That's the only reason you can't compare me to Brady.
The only reason I don't see.
Oh man. All right, guys. So here's this portfolio generator that you would be able to see if, of course, as you're getting into property selection here. This first tab, I'm going to kind of breeze through it. I just want you to see it, but this is what drives all of the portfolio recommendations. This is where every asset that JWB has, we have 14 assets in inventory right now. You'll get to see all of those numbers right here. You get to see all of the important information that's going to drive your pro forma as well. So you'll see, information on purchase price, percentage down, interest rate for your loan. You'll see a lot of information that is important to know today. Like, what is the monthly rent that is being earned right now, is being received right now? That's an important day one. I need to know that today. Other things like property taxes, insurance, those are important for today to know.
Mortgage rate.
Real
mortgage rate.
There you go. Your interest rate on your mortgage, right?
Yeah.
But you also need to be set up for success for the future. So there's other things on here that are assumptions that are based on our real world experience. Things like maintenance cost, vacancy cost, rent price appreciation for your market, home price appreciation for the Jacksonville market. And if you were doing this on your own, it would be on your market. These are all really important assumptions that need to be based on something other than what did somebody Google or what is some industry standard. Again, all of this data is backed by a ton of research, both internal data and then data that we pay a hefty amount to our consultants in order to be able to have accurate data here.
Got it. So 3 buckets of stats here. They're kind of like the ones that like you can't get wrong, right? Like the actual stats on the house. Then there is the things that you need to know currently that you can get a quote on, like your mortgage rate and your insurance costs and things of the sort. And then there's the performance proprietary data that JWB brings to the table based on these like 6,000 data points and 19 years of history of how you make things perform that feed the estimate of returns, not just for year one, but for year 10 through 100.
There you go.
All right.
There you go. All right. So now we're going to go to the next tab, which is your recommended portfolio tab. I'm going to break this down as well. We'll start with just kind of an explanation of what we're seeing here. So these top sections are here to make it really clear and easy as to what we're doing for you when we're making these recommendations. So your top box here, this client information box, is built for you. Of course, this is a live demo. But for this demo, what we're assuming, oh, you know what? I wanted to start off with a little bit of a different budget there. You guys are going to see the next iteration of this in a second. But let's start off with a portfolio that is going to be held on for 10 years
Mhm.
and that the client has $75,000 that they would like to invest in single family rental properties with JWB. Down here, we're going to see your portfolio investment summary. And I haven't chosen your asset yet. You guys are going to be a part of that decision and that recommendation together. But I just filled this out just so you would see how this summary works. This summary, at the end of the day, guys, we love to be a steward of your money. We love for you to have trust in us, give us your money, and then we give a whole bunch back to you. And it's really helpful for you to understand how much we're expected to give back to you right off the bat. That's what this box, this investment summary, tells us. It says, okay, I've got one asset in this fictitious example. There's a binder deposit that would be required. We'll fill that out later. But this investment would require, call it $79,000 as a total initial investment. And then over 10 years, it is going to grow to the tune of about $116,000,
Mhm.
which would mean that your total portfolio value at the end of 10 years would be roughly $195,000. Right? We are taking this asset, we put 79 into, and it's going to be worth 195 after 10 years.
Got it.
And then the real way to understand how hard your money is working for you is your internal rate of return. There are a number of different ways to look at assumptions and returns on investment and all this good stuff. Internal rate of return is the one you want to look at when making a decision on an asset like a single family rental property. It takes into account the cash flows, the timing of the cash flows, the amount of the cash flows. And so it's not just enough to look at the total value it will be worth. You need to look at how hard your money is working for you. And that internal rate of return number is a great way to standardize it,
Mhm.
depending on when the cash flows come in. And we want that number to be very high, and it is, right? So 9.9% here.
Beautiful.
Then we want to know, how is this being driven as well, right? Is this a speculative asset that is all based on one profit center that is maybe costing you money every single month? Or is this an asset that is driving it over 5 profit centers? Well, in single family rental properties, it's over those 5 beautiful profit centers, and they all work so well together. And so we outline the portfolio and show you how much of your returns is going to be driven by net rental income, would be the first profit center, your tax savings, your principal pay down, your home price appreciation. And then we also include some knowledge about inflation hedging and inflation profiting. Although, to be quite honest, we don't include those calculations in our returns. The reason is it becomes a little theoretical, and the returns are strong even without including the inflation hedging and inflation profiting into it.
Got it. So this is, again, the 4 out of the 5 profit centers: net rental income, tax saving, principal pay downs, and home price appreciation.
There you go.
Got it.
We also include the costs that come along with this. Sometimes from the community, we'll hear questions, hey, does this include what it's going to cost me to sell the asset after 10 years or 20 years or however your hold period is? And the answer is yes. And this is available for you to see even before you make your investment decision, which is nice. This is something on that top 10 list of things that turnkey providers forget to include when they're giving you these fantastic 20, 30, 40% estimated returns on investment. I don't know another one that I've seen that includes estimated acquisition and liquidation costs. We, of course, take that into account, and that's factored into your return on investment.
Awesome. Okay. So this is a sample output of putting one property into the portfolio based on the inputs from the other sheet.
Mhm.
What's next? Are we now gonna like figure out how do we actually pick a property here?
Yeah. All right. Now we're gonna get into property selection together.
Okay.
So put yourselves in the chair of saying, listen, I've got $75,000 to invest with JWB. Let's say that you've done your due diligence on us. We've done our due diligence on you. We understand the goals and the resources, and now we're fast forwarding to the fun part,
Mhm.
which is property selection. So
Have fun.
it is fun, right?
Yeah.
I mean, think of how hard it would have taken generally to get to the place that we're at right now, right? To understand, first of all, to find 14 assets that you were thinking about investing
True.
in, right? Than to have all that information provided for you, not just the information today, like rents and property taxes, but how much is that going to cost 5 years from now, 10 years from now?
Yeah.
All this is just packaged. So I think it's a lot of fun. What do you think?
Yeah, I hadn't even thought about it when we were talking about this, right? But like generally the usual experience is like you're trying to find a property, and looking at 14 of them is probably not the norm, right? Like you're probably just like looking at, does this one deal work? Does
Mhm.
this one deal pencil? The idea that you can like be looking at the grocery store shelf and be like, all right, which one of these do I want to put in my cart and check out with, feels like a very different
Very
experience.
different, very
Yeah.
different. And when if you're going through this experience with JWB, we also want to make this something that doesn't lead to paralysis by analysis.
Mhm.
So a lot of what I'm doing with you on the call today would actually be done behind the scenes in preparation for your property recommendation call.
Yeah.
And then of course we walk you through how we got there. But yeah, so you've got the full grocery store aisle. You can pick and choose your 14 assets. And this just wasn't possible. It wasn't possible 5 years ago, even with
Mm.
JWB clients, to have this level of transparency. And definitely not when I started to invest 20 years ago.
Okay. Take it
Um,
shopping.
so now, because I want to show you everything behind the scenes, I'm gonna show you what I would do or what my team would do to prepare for your call in advance. And so what we would do is we'd look at all of the assets together before we make our property recommendation. So it's just really simple. Uh, we can just add which asset we want to add to your recommended portfolio just by, putting a number here and adding it to the list here. So let's assume that we added all of these assets, even though I know that we're not going to choose 14 assets on our call today. And this just comes over to this next tab, which fills out your recommended portfolio. Now, why this is important is because now we can understand what our criteria is for property recommendation for you. And the way that we go from 14 assets and paralysis by analysis to understanding what is the number one right asset for you is simple. We go with our order of priorities. And our order of priorities is number one, we're looking for the highest return on investment. Number two, we're looking for positive cash flow.
Mhm.
And number three, it needs to fit in the budget. So we're going to look number one, highest return on investment. Number two, positive cash flow. And number three, fits in the budget.
Okay. So ROI, return on investment. Number two is positive cash flow, making sure that it's not negative. And then number three is budget.
There you go.
Is there a reason why it isn't budget first?
Well, if you just go with your budget first, you might miss the highest return property.
Okay.
Right? If you only look at the lowest properties here, because listen, we need to drop it from 14 properties we're looking at
Mhm.
to, a lower number of properties.
Mhm.
If you just go with the lowest budget properties, you might miss the highest return one.
Okay.
And it comes back to like, what is my job? What is JWB's job
Mhm.
here? We are financial engineers. We are here to help you earn the best risk adjusted return for your given budget.
Yeah.
It's not help you spend your budget and then get the best return with it. We are here to deliver the best risk adjusted return first within a given budget. So
It's basically just not like you're not buying the cheapest property, you're buying the best value,
Mhm,
right?
mhm.
That's what you're going for.
Yeah, absolutely. If you come to us with $75,000 and we find an asset that only requires $67,000 out of pocket,
Mhm.
we're going to recommend that one rather than maximizing the $75,000 that
If
you
you're
came.
going price first.
Yeah, if you
Gotcha.
came price first and you
Gotcha.
said, I want to spend all 75, it would lead to an incorrect conclusion if
Gotcha.
our job is to deliver the best risk adjusted return.
Cool. All right, let's see it. Let's see this ROI, cash flow, budget
There we go.
framework. Let's see it.
So here's how we do it. We choose the property together and call in less than 5 minutes. Put me on the clock here. All right. So we're taking this decision and we're going to make it a whole lot easier.
Okay.
First thing we do is we look at what is our highest return on investment.
Mhm.
So let's choose the top five.
Top
We're going to
five.
go from 14 to 5. We're going to choose the top 5 highest return on investment properties. So we've got a 10.9 right here.
Mhm.
Remember this, okay?
Rio Grande.
Rio Grande.
That's
We've
right.
got Roselle.
Roselle.
All right. We've
Uh-huh.
got 3rd Street
Third Street.
here
Okay.
and Rio Grande, Roselle, 3rd Street. Then we've got Cocoa.
Yeah.
And then we've got these two on Caroline's Court, which is the same.
Okay.
All right. So we're going to do 6.
Oh, okay. It's getting spicy.
We're going to do 6.
Yeah.
All right. So now we're just going to come over here. We're going to limit the 14 and we're going to choose those ones. Do you remember them by heart?
Yep. I got it. We got 3rd Street.
All right.
We got the 2 on Caroline's Court.
Okay.
We got Cocoa.
Okay.
We got the Rio Grande
Oh, love that.
and Roselle.
There we go. All right. Now we're in line with how we need to make decisions as educated, not your average investors. We are here to produce produce a risk-adjusted return, the best one we can find. So we're going to start with what is the best return. And here's what we've got. So now we've accomplished number one. Now the second step is positive cash flow. And we need to have positive cash flow both in year one and through the horizon. And this over here helps us understand on an individual property basis, how are those 5 profit centers working? If you remember up top where I showed you, it was from a total portfolio perspective. Now this is on an individual asset basis. So now this really helps us make sure that each asset is going to hit that criteria.
Got it. So if I'm following along this criteria, I'm just going to kind of guess here. We just went ROI. Now, next we look at rental income, net rental income, to make sure that it's positive cash flow. And as I'm looking at this spreadsheet over here on R, they're all positive.
There you go.
So then what's the next step?
Well, so because we know they're all positive, the value of working with a financial engineer starts to show itself here. Because I don't look at that and say, geez, these are all positive. Okay, check. Let's go on to the next thing. I'm looking and I'm saying, how can I drive a better risk-adjusted return for you, given those constraints, those 3 constraints? So I look at this and I see all of them are cash flow positive over the full horizon. Immediately my head says, how much have we put down? Because I know if I put less down, I'm going to drive a higher rate of return for you. What I'm going to do is actually see the net rental income come down here. And I'm going to say, if it comes down, but it's still positive and this rate of return goes up, is that a better thing for you? Absolutely.
Time out. We're also looking at this idea of like total investment right now are all above 75,000, right? So we would have to go back and do some financial engineering if it's going to fit.
And this is the work that's done behind the scenes.
Okay.
You know, so but yes, if you saw this and you were just looking at this, you're like, well, nothing fits for 75. That would be another trigger and another clue to say, maybe we should extend it beyond the top 6.
Okay.
Maybe we would do it beyond, look at the top 8 or 9 to find the right one.
Got it.
Give it in the budget.
Okay.
So yeah, so we see that this is all positive, and we also see that budget might be a constraint, and we're saying to ourselves, all right, well, let's go back and let's see what the cash flow positive nature is if we drop it from 30% down, which is what it's built at in the beginning, and we say now it's 25% down. Now we see all of these returns on investment have jumped up. Now we have a couple in the 11% range. And we're looking over here and we're saying, you know what? These are all still positive for the full horizon. Now we just financially engineered this to deliver a better risk-adjusted return on investment, and we lowered your investment out of pocket.
Yeah.
Went all around the board, right?
Yeah. And now that Rio Grande property is looking juicy.
There you go. There you go. So now we've got that, right?
Yeah.
We then are starting to say, okay, out of here, which ones have the highest rate of return? You've already zeroed in on Rio Grande. It's a clear, it's a winner here because not only does it have the highest rate of return, it also is within the budget of $75,000. So it just happens that this is a clear winner, and this is how we would choose that asset for you if you came to us with $75,000 today.
Very cool.
So it's not always that easy as a clear winner. What happens a lot of times is we are going back and forth between 30% down, 25% down, and we're choosing between some that are higher returns but may not be within the budget. Which we share with the client and say, listen, this is your total out of pocket, right? Here's where your budget is. And we're looking at all 3 of these factors together to make the right choice. This one happens to be super simple. Rio Grande's the winner. That's the one that we would choose for you for $75,000.